Hello guys, it's ForexPip79 here from Instagram. Yeah, you guys know me. Today I'm going to talk to you more about the four stages of the market cycle and why is it important for you to understand at what stage is the market right now. Because for instance, right, because if you do not know where the market is right now, you may be buying at the wrong area or you may be selling at the wrong area. There are times where you need to step in, there are times you need to step out. All right, doesn't mean that you need to enter the market all the time. I spoke a lot about trend and momentum. If in all my past YouTube videos, you can see, and I really trade with the trend and momentum on my side. Once I see a weakening momentum, I'm out, and once I see something that's not right, I'm just out. Okay, these are the four stages of the market cycle. You can see. Just remember the order, right? Later we will show you on the screen, and I'm going to give a possible probability outcome about the pound USD that have respected this cycle. Okay, maybe you just remember this four. Okay, market have to start from somewhere, right? You have to start from somewhere. Remember this order, right? When market is in the below, when market is low in a low position and the price is low, okay, and this is the previous low and it's not able to make a lower low. All right, when price bound, you can call it a range market and try to range here, never make a previous low. There is a high chance that the market is doing an accumulation. Okay, this is accumulation phase. This is um where I mean, like, it's usually this accumulation phase, it come after a downtrend. After a downtrend and the market have exhausted to go down and the momentum start losing, that is where the accumulation starts. Okay, the accumulation may look like it want to go down, but it's as long, just remember guys, as you remember the lower high, lower low, and the higher high, higher low. Okay, as long as the previous low is never broken, it's not yet a downtrend. Okay, as long as the lower low is not broken, it's not yet a downtrend. So during the accumulation phase, market will move up and down until it comes to a decision point in which it will break out of the accumulation stage, and that is where we go into the second stage called the markup. Okay, that is the markup. Markup, it means the prices have to go up. Okay, this in terms of the demand and supply and demand. The demand is too much. It need to raise the prices, and that is why the market have to go up. All right. So as the market travels here, this is just theoretical. Okay, price may move here up and down, zigzag, right? It never move in a straight line. Okay, but just take note, as long as market has broken out of accumulation phase, we want to look for a buy. Okay, after a strong accumulation and price broke out, that means we know that we are in the second stage. So as price goes up, and here, this is where we are looking for a buy. Okay, but do not, so that's why I say, when the price goes up, right, you need to know how far has the price go up. How far you want to buy, maybe around here and here is still okay, but once you start to buy around here and here, this is where it's more risky. So at the point when price went too high, that is where you want to stay out. You want to be an observer and see what happens first before you take any trades. Okay, so once the market goes up and then there's a highest point here, and there should be a wick, so that is the highest point. So the same theory, as long as a previous high has not been broken, it's not yet an uptrend. Okay, as long as the previous high is not broken, it's not yet an uptrend. So in this case, what will happen is that we can see up down movement here. Okay, and then it will come to the market will probably try to go strong right here, and this is where the late buyers will come in. And once the late buyers come in, that is where the big boys push the market down. So doing that, and then when you see a big move down, that is where the distribution starts. Once the big move starts and the big move down starts, right, that is a distribution phase, which is the third stage, and followed by the markdown of the price. Okay, when markdown of the price. So when price go down, you're looking for a sell, and then comes back to the fourth stage is the reaccumulation. Okay, because when price go down and down and down and down and down, okay, as price goes lower and lower and lower and lower, at this point of stage, because people were not going to sell here. They think, okay, maybe it's still just a retrace and want to uptrend, but they like to sell here. They like to sell. They want to be late sellers. Okay, whoever be late sellers in a trend that's already been down, you are you are actually in a more risky position. Okay, you are more risky position because you are entering the trend late. Okay, so before you enter any kind of trend, you must ask yourself, how far have price traveled? How far have price traveled? And I'm seeing a weakening momentum. Okay. Okay, once the price is low, then we should be back on the accumulation stage, in which at times there can be a false break. And then the price, because at this point of time, people will say that it's still a downtrend because of this. And then when the false break comes, they sell their positions, and once their sell orders are all been taken in, and that is where the big boys take all your stop loss. And the big boys push the price up and hit all the stop loss that is over here. And then you will see what the hell just happened, right? Okay, so remember the four stages, right? Accumulation, a markup, distribution, markdown. Okay, do not chase the markets. Know where the stages are. Okay, know where the stages are, and it will be extremely. You can see even in any time frames, but to me, I like to see in the bigger time frames like H4. But if I couldn't see at H4, you can see at H1. If the momentum starts to die down for H4, you can see what happens in the lower time frame. Okay, so I'm going to show you an example based on this theory. Just remember these four stages, okay? And then we shall let you see on pound USD what have happened in the past, what happened last week, and what is the possible outcome that may happen in this coming week. Okay, so give me a moment. Sorry, I'm not wearing any shirt. Okay, so I hope you can see my screen. Okay, so let me just begin here, right? So this is the daily chart of the pound USD. Okay, we have to begin from somewhere. Okay, I'll just say begin from here. Okay, this is the highest point. This is the highest point at this stage. And then where is the lowest point at this stage? It should be around here. This is the lowest point. Okay, this is the lowest point. This is the highest point. Now what happened here is that after an uptrend, market came back, retrace, and then retest this area, and then there is a congestion in which it retest, it never goes up and never goes up. As long as market haven't make a higher high, it's not yet an uptrend. So during this accumulation phase is where the accumulation phase started. Okay, accumulation phase started here. During the accumulation phase, you want to stay out first and want to wait for a breakout. Okay, you want to wait for end of the accumulation phase. Okay, once price get out of the accumulation phase, okay, where is the higher high? Okay, where is the higher high? You can say this is a higher high, but look at the momentum. It's still very strong here, so it's not really good to take a buy. Okay, you'll still be stop out on here, so you wait for a weak sell momentum. Okay, so the weak sell momentum comes here, and then this is a false break and price broke out. This is the confirmation candle that the price has gone up, and we are officially in an uptrend, and you should be looking for a buy when you go into the 4-hour time frame. Okay, so at this case, this is accumulation stage 1, and then price markup. So when the price markup, that means we are going into a markup, which is the second phase that I said just now. Okay, as price goes up and down, and then eventually it will be exhausted, because as the price moves up and down, it will lose momentum. It will lose momentum. So you see this is a very strong, hold on. Okay. This is a very strong bullish candle, right? Very strong. But then look at the next candle. It make a false break, and then it went close quite low. So this is the first signs. These are the first signs that the buy momentum has died down. Because what happens to this false break? Because when people see this move, they will say that I want to buy this thing. These are called late buyers, bro. Late buyers. Okay, we do not want to be late buyers. Okay, this is the point of time when price, as a You want to buy a trend. How far have the price moved? How far have the price moved? We were thinking about the buy. Okay, don't be a late buyer and don't be a late seller. Okay, so in this case, where is this highest point? The highest point is around here. Okay, the highest point is around here. Okay, remember as I say, if the highest point, previous highest point have not been broken, that means it's not yet an uptrend. Okay, so what happened after that? Price goes up and still could not make a high. It have to go down, and this time it make quite a big move down. At this point of time, this is where the risk trend is not healthy. Not healthy for you to enter any kind of positions if you are not experienced in looking about the momentum and trend, all that. Okay, so this is where then price goes up and down, and here this is where actually all this congestion around here, okay, all this congestion around here is actually a distribution cycle. Okay, there's a lot of congestion here. Okay, there's a lot of congestion here. False break happens here, up and down. All right, you can see that from here. Okay, and then at this point of time, you can see this is called an exhaustion candle. What is an exhaustion candle? An exhaustion candle is that after a strong close, the next candle could not close and build up on that momentum. That is an exhaustion candle. Exhaustion candle from the buyers. Okay, exhaustion candle from the buyers saying that they are not able to push market higher. So in this case, no higher high has been created. So once the exhaustion candle comes in, that is where you should start looking for a sell. Okay, we should start looking for a sell. But if you miss it, it's okay, no problem. So now we're in the stage accumulation markup, and we are in the distribution stage, right? And that is where market moves right very low, and this is where the distribution stage starts. Okay, the distribution stage starts, and then there's a big move down where the distribution stage starts, and then we can see this is the previous low here, right? This is the previous low, and it has been broken completely with the wicks. This is where the downtrend starts. This is where officially, even though yes, you can start from here, but you will not recognize this move because you will say that it's just a retrace. But look at this. Whatever buys that has been here, and here are all being taken out. So you need to know the market cycle, okay? Don't make this entry based on what happened here. What happened here is over. It's already done and dusted. Okay. So what happened? Okay, so price mark down and make a new low. Okay, and we can see lower high, and this is called a redistribution. Okay, redistribution, and then price broke the previous low, and here until here. So this is the previous low, right? Okay, sorry, it's not the accurate. Okay. This is the previous low, and last Friday price make a false break and still close above. So the question is now, what stage are we? Okay, so in terms of my view, my analysis, the way I see is that we already completed the 4 stages. At this point of time, there is no reason for us to look for a sell. There is no reason for us to look for a sell because price already traveled so much. Instead, for now, we should start looking for potential of a bullish momentum or a bullish formation. Okay, it can be another false break come today, this Monday. We are not so sure. But the thing is, I recognize this as an accumulation phase. If you ask me why do I recognize it as an accumulation phase? Look at the retracement. This is a weak retracement. This is a weak retracement, and then suddenly there is a very strong. Now, based on this strong momentum, how can this be so high? So this is telling me that the downtrend is no longer healthy. Yes, we did see a big move on the Thursday. Okay, on the big move, there is a Thursday. But at the end of the day, did market break previous low? If the market did not break previous low, that means it's not yet a downtrend. That means there is no continuation pattern. So I recognize this as an accumulation pattern. Okay, I recognize this as an accumulation pattern. So if I'll be more interested in a buy rather than a sell. Okay, if you're looking, okay, so now we are going to look at the H4. Okay, the H4, and we are going to see what kind of formation are we seeing. Okay, so in this case, the previous low that is here not be violated. Instead, it make a false break. Okay, instead it never closed beyond the wick. Price push back. Price push back up. So at this point of time, what can we see? We can see weak sell momentum starts. Okay, weaker sell momentum at this point of time. When you see the second close sell momentum is weakening, this is not the time for you to sell. Okay, this is not the time for you. But is it time for you to buy? Also not. Why? Because there is also not enough buying momentum. Okay, there is not enough buying momentum. So the best way is for you to mark here. This is the previous high that he has made. Okay, we should see a series of consolidation made here. But once price goes up there and close above, your radar should be on for a buy. Your radar should be on for a buy, because we are going to start the stages all over again, in which the accumulation, markup, and then distribution, markdown, all that. The 4 stages restarts again. It's always repeating. Stage one, until stage 4, and then go back to stage 1 to stage. It's always like that. It's always like that. So identify your charts. What stage are you in? What stage is price right now? Okay, before you begin any type of entries. All right. So that's it for me. So I hope you get the good view about how the 4 stages of market cycle works. And going into next week trading, I wish you all the best, and please do subscribe to my channel, and you are free to leave comments, guys. Because I think I put my video, but I think there are a number of people who leave comments. But like, for instance, if you think that this information is quite useful for you, you can leave any kind of comments, all right? But if you want to leave not so good comments, so it's okay. It's okay. I'm open to whatever that is feedback that is necessary. Okay. So this is my explanation of the 4 stages of market cycle. Go and look through your charts and try to apply the concepts and apply it to your trading and see the outcome. Okay. So that's what I got for you today. So I hope to see you. I will see you in my next session. Thank you, guys.